Okay. You're asking me also, just 1 second, and I'll give you those links as well. Okay. Yeah, this is the link. I don't know if you can see that. Yeah, okay. I think I can type. Can I? I can type to everyone as well, yeah?
That you cannot, actually.
Okay.
Yeah, so I'll just push everything for you.
And I'll just let me put all the other things in there as well. So you've got everything ahead of time.
And you can start whenever you're ready.
Okay, 1 sec, and we'll start. Okay, that's everything. Okay, so how to become a successful trader with any size account. Okay, very important topic, and one that people ask me all the time. How much money do you need? How long is it going to take me? All those sorts of questions. But it's very important to understand what size account you need to start with, and I'm going to answer that question during this presentation. Just a quick disclaimer before we begin. Just bear in mind all comments I make are for educational purposes only. You'll know there's a high degree of risk involved in all types of trading, and I'm not responsible for your trading and investment results. We don't take any responsibility. A little bit about me for those of you who are here for the first time and the first time listening to me. You can read about that. I've been trading for close to 15 years now. And just to tell you a little bit about TRADESMART, we're a trading education business, and we focus on teaching you how to read the market professionally. That's stage one. And how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. Here's our agenda. We're going to talk a little bit about goals. Remember, every business needs to have goals. Defining your edge, the trading framework that you must have in place in order to succeed, and the process you need to go through. I'm going to share with you the step-by-step process a professional trader goes through. And then we're going to talk about account size. And then I'll open up, if we have time at the end, for audience questions and answers. And you can always send me email, and it'll be posted in the chat area. So trading is a business, so treat it as a business. That's the first thing. Hobbies cost money. Businesses make money. First things first, goals. You need to ask yourself, why do you want to trade? And again, if you want to type it, I can't see people's messages, can I, if they type them in? Can I see feedback? Okay, I assume not. Okay, so again, why do you want to trade? Very important question. And that gives you a big picture reason of why you're doing what you're doing. Do you really know why you want to trade? And interesting enough, to make money is not a good enough reason. There's many different things that you can do to make money, and trading is one of them, but there needs to be something a bit more than that. Like your goal may be to have freedom of time, so you can do whatever you want, whenever you want. You're in control of your time. You're not answerable. I remember when I left Credit Suisse in 1999, 2000, and I was answerable to a boss there, and then I became my own boss, and I could do what I want. I can take holiday when I want. I can work when I want. That's the advantage of the freedom that trading can give you. So you need to have a goal. If that's your goal, then trading can give you that. Why are trading goals important? Because they give you focus and direction. They give you satisfaction when you achieve them. And that gives you a positive trading experience, because at the beginning you're probably not making money. But if you know that you're achieving your goals and milestones step by step, then you can feel good that you're getting closer to your goal of becoming a consistently profitable trader. So what are your trading goals? For example, your goal could be to acquire expertise in reading the market. And I think that should be everyone's first goal. Learn how to read the markets. I believe most people fail at trading because they don't learn how to trade. They try and executing trades is not just trading. There's much more that goes into trading than that. There's a preparation time, and then I'm going to share that with you in the process that you need to go through as well. You should set challenging and feasible goals, and you should set goals according to your level of mastery. Realistic goals lead to a sense of accomplishment and progress, as we said earlier. Another important thing you need to ask yourself is, how committed are you? Will you invest in an education and training? Remember, trading is a business like any other business, and you need to get training at the beginning, yeah? Will you work on yourself? Are you going to do what is necessary to change yourself? Because we're not wired the correct way at the beginning to become successful traders. We have to work on ourselves and rewire ourselves, especially the trading mindset that we need to develop. Will you learn from your mistakes and failures, or will a learning trade put you down and you don't get back up? Or are you going to take that trade and learn from it? What did I do wrong? How do I improve next time? Every failure is a stepping stone to success. I always say to my kids, I don't mind if you make mistakes, but don't make them twice. Will you do whatever it takes? How committed are you? And when I was starting out trading, people used to ask me, what's your plan B? What are you going to do if it doesn't work? I'm like, I don't have a plan B. I'm going to make this work no matter what. That's the commitment you need. You'll do whatever it takes. Once you've got goals and you know why you're trading, you've got to define your edge. Yeah. So what is an edge? An edge is an advantage over others. That's what an edge is. So what exactly is a technical edge in the market? That's recognizing when the odds in the market are in your favor. That's what an edge. It doesn't mean it's going to work every single time. That's not what an edge is. We're talking about, statistically speaking, that if you take this trade a large number of times, you're going to make money doing it. That's what's called a positive expectancy. You need to ask yourself the question, who is on the other side of your trade? Now, if you don't know who's on the other side of your trade, then maybe you're the novice trader on the side of a professional, on the other side of a professional's trade. So you need to understand when you're buying or selling, who's buying or selling to you, so you can understand where your edge is. So do you know what your edge is in the market? Now, if you want, just type it into the chat area. Do you know what your edge is? Now, this is very, very important. Your edge should be pretty simple to explain. If you cannot clearly explain what your edge is, you do not have one. And this is going to shock you, the next statement. If you don't have an edge, do not trade. You can't possibly make money consistently in the market without having an edge. Now, you need more than just an edge, because have you proven your edge? You've got to have an edge, for example, buying in an uptrend, on pullbacks to demand zones. Okay, that could be your edge. Recognizing an uptrend and buying a pullback, and then taking it to the next supply level, for example. But have you proven that that idea works? Have you written a trading plan with a strategy in it that identifies exactly what your edge is and shows you how to enter and exit the trade and manage risk and everything else like that? Does your edge have a positive expectancy? That means, as we said earlier, will you make money over time trading it? If you have a positive expectancy, it means you're going to make money on every single trade on average. For example, a salesman may make 100 phone calls in order to make, one sale of $100,000. So you get 99 rejections and one sale of $100,000. So each phone call is worth, for you, 100,000 divided by 1,000. Yeah, that's how much each phone call is. Even though when you're going through them, you're getting no, no, no. But you will make money over time. You know that you have to make 100 phone calls in order to get the one sale. Yeah. Now, this is also very important. Can you successfully trade your edge? It needs to be fitting and suitable to you. Just because someone else can walk the tightrope doesn't mean that you will be able to do it. Even if you understand exactly how it works, you might be afraid of doing that. So you need to have a system that has a positive edge, a positive expectancy, and you need to be able to successfully trade it. And let's move on now into the trading framework. You need to have a trading plan. Okay, if you don't have a trading plan, do not trade. Okay, in that trading plan, you need to have money management rules, risk management rules, and at least one trading strategy. You only need one, at least a minimum of one. I would start out as If you're starting out at the beginning, or you're not yet successful and you have 100 strategies, cut them down, pick one and focus on that and become an expert, a specialist in one strategy. Now, trading plan's not enough. You need to be able to log your trades. You need a trading log. That's where you log all your trades, what strategy you're doing, strategies you're taking or strategy and anything else. That's the log. It's not what your broker keeps. You need much more than that. And you need a trading journal, which is logging yourself. What are you thinking and what are you feeling when you take a trade, before you take a trade, during the trade, when you take an action in the market, what was going through your mind, what was going through your emotions? You need to know if you make any mistakes, what's causing them. You can go back to your trading journal and that can give you a clue as to what's causing you to tick in the market. So now you've got the framework in place. We need to go through the process. So how does a professional trader trade on a day-to-day basis? So the process you go through is like this. You need to have routines, whereby you prepare yourself for trading. There's two things that need to be ready before you trade. The first thing is you need to ask yourself, before you start trading, am I ready to trade? I go through a routine every single day from the morning until I start trading. And part of that routine includes studying, meditation, exercise, going to the gym, going swimming, going for a cycle, everything before I sit down to trade. I need to make sure that I'm in tip-top condition and ready to trade, that I'm in the zone, okay? You need to be, it's a peak performance activity. The next thing you need to do is you need to look through the market. Is the market ready? Is the market showing me anything that looks worthwhile trading? So those two things need to be in place in order for you to succeed as a trader and trade and be what we call in the zone, okay? If you're ready to trade and the market's not ready, do not trade. If you're not ready to trade, but the market looks great, but you haven't done your preparation, then do not trade. Preparation equals confidence. You have to trade with confidence. If you're confident about what you're doing and you know it makes you money over time, then losing trades become part of a winning system, and the emotions are not the same as they are when you don't know whether your system is a winning system or not. A losing trade is just confirming that you don't know how to trade. So you can see it's the same thing. A losing trade, part of a winning system, is part of a winning system. You're going to make money with that. A losing trade when you don't know what you're doing, again, is a confirmation that you don't know what you're doing, and it's going to have an effect on your psychology and everything else about trading, which is why a lot of people, I think, give up because they're not confident in what they're doing and they can't stand the losing trades and losing money and being wrong. As human beings, when we're wrong, we don't like that, and we don't like losing money. In trading, they happen together. When you're wrong, you lose money. Another thing that's very, very important, and again, to work on, is patience. You need to be able to wait until the market shows you your edge. And then you need discipline to follow your trading plan. Again, your job as a trader when you're trading is to just follow your trading plan when you're doing the trading part of it, when you're executing orders in the market. And again, psychology and emotions. If you're confident about what you're doing, you've proven it, and all you have to do is follow that trading plan and you will make money, then why not just do it? Why should you feel emotional about that? Okay, you should feel confident, and you should know that what percentage of your trades are going to be losers for each strategy. If your batting average is 50%, you know half of your trades are going to be losers. So why are you going to feel so bad about having a losing trade? And on the other side, you've got to feel the same when you have a winning trade. I remember when I started trading, I was sitting on the trading floor, and I used to walk past. There were two traders on the floor that were always up the first half an hour. I was trading the US equity market, the New York Stock Exchange. And sitting on the floor, and within the first half an hour, there were two traders always up between $2,000 to $10,000 in the first half an hour. And sometimes I'd walk by, and sometimes they were down. And I could not tell by looking at them whether they were making money or losing money. They looked exactly the same. Whereas, if you look at a trader that's not quite there yet, when they're losing money, they're running around, maybe throwing their keyboard across. I've seen that across the trading floor. Actually, when I was working at Credit Suisse, I saw someone throw something across the trading floor there when they got frustrated with something. So you can see there are emotions there, and that shows a lack of professionalism. Another important thing as part of the process, you need to be able to measure your progress. You need to know if you're moving in the right direction or not, and what you need to work on to get to the next stage. So you need to know how well you're doing. You could measure how many mistakes you make each week, and then, of different types. Say, for example, you make not following your trading plan, and that's your biggest mistake. So you're going to work on that next week. So you need to know, you can say this week, 50% of my trades weren't in the plan, and the following week, 20% of my trades weren't in the plan. I've improved. I'm still not profitable yet. I'm still making mistakes, but I'm improving. You need to be able to measure your progress, like any business. So here's an example that you can actually follow. I'm going to go through step by step. Number one, prepare yourself to trade. Analyze the market. You trade with a view to finding trading opportunities. Wait for the market to show you a trading opportunity and trading plan. Remember, I've highlighted in red the actual framework. So your trading plan. Take the trade if it matches. Take a picture of your trade entry. Write the entry in your trading journal, what you're thinking and feeling and why you took that trade. Manage the trade according to your trading plan. Here's the whole framework: trading plan, trading journal. And take a picture after the trade is completed. Take a picture of what happened next. Did you get out right? Did it go more? Did it go less? Did you get out at the right price? Then enter your trading log. Now we've got trading plan, trading journal, trading log, everything in the framework. And then write the entry in your trading journal when you finish with it. What did you learn from it? If you learn from every single trade you make, imagine now, go back, say you've been trading a year, but you didn't learn from every trade. You've wasted a year. If you learn from every single trade that you did, winners and losers, how to do the winners better and how to maybe avoid some of the losing trades and work on yourself and work on the causes that you may have taken those losing trades, or coming to terms with the losing trades that you were following your plan and there was nothing wrong with them, and it's just statistically speaking some of the trades are going to be losers, and working on that part of your trading mindset, then you're going to be in a much better place a year, the same in a year's time. Don't be like the person who's been trading 10 years with 1 year experience. You want to gain experience and trade, and you want to gain the correct experience, not the same experience repeated again and again like Groundhog Day. So now let's go on to a very interesting topic. So this is giving you a framework in which you can develop yourself as a trader. Another thing you need to ask yourself is account size. How do I do that? So we're going to go into account size now. All about account size. People ask this question: can I learn to trade with a small account? The answer is yes, but it depends on the market, okay? Certain markets require bigger account sizes, bigger contract sizes. You can, for example, learn to trade. When I first started trading stocks, for example, you couldn't trade in odd lots. You had to trade in 100 shares. That was the minimum. So if you were trading with a spread of 1 cent, then every cent move was $1, yeah? In the Forex market, for example, you can also trade with even less risk than that, because you can trade with micro lots now. When I started, it was standard lots. There wasn't any such a thing as micro lots. It was standard lots, which was $100,000 worth of whatever currency, and every pip move of whatever currency pairs you were trading was $10 around about, if it was denominated in dollars. Yeah. So you don't have to risk that. Now you can take a micro lot, and you can risk as little as 10 cents per pip move. So people say, is trading risky? Well, you decide how much money you're putting on a trade, so you can decide to risk a little or a lot. Now, if I ask you a question, does it make sense to risk a lot of money when you don't know how to trade, when you're learning, or does it make sense to risk a lot of money and blow your account out in the learning process? Well, you can answer that question yourself. It's very simple. From the brokerage side, yeah, if you're talking about Forex brokers, they obviously want you to trade big because they make more money if you lose the money, yeah, and they make more commissions on that as well. So it's in their best interest that you trade big, but it's in your best interest to trade small at the beginning, okay? So how much money do you need to begin trading? Now, my traders, when they begin, and we're trading the Forex market, because it's a great market to learn to trade on, it's very technical and it works beautifully. I recommend you can start with as little as $1,000 and you can risk $10 of trade. You can even go smaller than that, down to $2 if you want, or even $1. But I think $10 is a nice amount of money to risk on every trade. So you could start literally with $1,000 to learn how to trade with real money. Now, you're probably asking now, what about trading in a demo account? Can I learn to trade in a demo account? Well, yes and no. You can learn the mechanics of trading, but you won't be able to learn the emotions of trading and be able to learn that side, because when there's no real money on the line, unless you treat it as if it's real money on the line, when there's no real money on the line, you're not going to, as the saying goes, there's many millionaire demo traders out there. But do it for real. You find that when people move over from demo trading, say they're trading $1 million accounts, to trading their $10,000 account, and it doesn't work the same. They start making emotional mistakes with their trading, getting out of trades too soon, not letting them run, and not letting them run to their rightful targets, or getting out when they move against them before it reached the stop, for example, or not putting the stop in the right place, or putting too much money on it and putting the stop, higher because of the money management rules. So there's many other things. So demo trading is not really the way to go. Trading a small account with a small amount of risk per trade is the way to go. A demo account is good to learn the mechanics of trading. And maybe to prove your system, you can backtest, but it's not the same as getting into the real thing. As in, if you were a fighter pilot, for example, you can learn to fly in a simulator, but it's not the same as flying the real thing. It's almost the same, but it's not the same. You can make a mistake and you're still going to be alive. So you can learn to trade in a demo account, but it's worth learning to trade with a small account. So what's very, very important when you're trading is to focus on the process and not the money. If you're focused on the process, if you asked say you were a heart surgeon, is the heart surgeon thinking about how much money they're going to be making when they're in the middle of performing an intricate triple bypass surgery or whatever, or some other heart surgery? No, they're thinking about doing their job the best they can, and money is what they get for doing a good job. So too, it should be with trading. The fact that as a trader we're dealing with money shouldn't make a difference. We should be focused on the process of finding good trades, executing them, and following our trading plan. If we do that well and focus on the whole process that I shared with you earlier, and not the money, then if your system works, you should make money. The money follows from performing well, from doing everything else in the best way possible. Now, what happens if you start focusing on money is you start doing things wrong. You start making mistakes. So again, this happens to everyone, even the bestest of traders. And I remember at one point in my trading, I turned off my P&L. I wasn't watching how much money I was making or losing, because it would kind of get me focused on the money. And it's very interesting if you do that with your own trading. Forget about the money, apart from position sizing and knowing how much you're risking, and then focus on taking good trades and look at your P&L at the end. So here's a question. What account size do you need? So this is how you do it. You want to look at your trading results, once you're a successful trader. Again, if you're not yet a successful trader, go as small as you can and take the smallest account possible in order to learn. If you don't do that and you take a bigger account, you're going to be focused on money. If you take a small account, you're not going to be focused on money, because making $10 or $20 in a trade is not enough to live on, But this is what you need to do first. You want to look at your results once you get that consistency. And you want to know how many R's. R is a unit of risk. How much are you risking? For example, and we're going to, if you're risking $100, then your R value is $100. So how many R's, how much money are you making compared to how much you're risking on per trade? That levels the playing field. You don't want to be like $1 million trader, trading $1 million account and he makes $1,000, or you have a trader trading $100,000 account making $1,000. Who's a better trader? They both made the same amount of money, but the one with the smaller account's a better trader, for example, Or the one with $1 million account makes in a month $20,000, but the one with the $10,000 account makes $1,000. Who's a better trader? The $1 million account made more money, but the other one made a bit higher percentage of his account size. So that's exactly what I mean. So we level the playing field. So once you know how many R's you're making consistently a month, then, and the next question you need to ask yourself is, how much money do you want to make per month? So remember, most people do this backwards. They kind of start with account size and then they kind of go from there. You need to go the other way. You need to look at your results, and then you'll know, once you know how much money you want to make, then guess what? Once you've got those two numbers, you now know what account size you need. And let me show you by the way of an example. So say you start with a $1,000 account, which I recommend, especially if you're trading the Forex market. If you're trading the E-minis market, for example, that's not enough. So again, you want to pick a market that you can actually keep your risk down. If you risk 1% of your starting balance per trade, that means your R value is $10, yeah? If you consistently make $100 per month, yeah, that's 10R, 10 times 10. Yeah, if you can make $100 a month, you make 10 times what you're risking. So if you now want to make, say, $1,000 a month, what account size you need? Well, simple maths. If your R value is now 100, which is 1,000 divided by 10R, then that's what you need to risk per trade to make $1,000 at the end of the month. If you make 10 times 100 is 1,000, yeah? So if you make sure that your account size now is whatever you're risking per trade is now 1% of your account size, then you know you need an account size of $10,000. Simple maths. So that's exactly how you do it. You don't start with the account size and then go the other way. You start with your results and you work backwards. So that forces you to be a consistently profitable trader first before you start thinking about having a bigger account size and how much money you need to make. If you think about that, it makes sense. Why would anyone start at the beginning wanting to make a certain amount of money when they haven't proven they can make a small amount of money with a small account? It makes no sense. It's like taking out, a crude example, taking out a Ferrari to drive when you don't know how to drive. Not a good idea. You'll probably end up crashing it, yeah? So you want to take a car that's not so valuable out when you're starting out or when you're beginning driving while you build experience. Once you build experience, you'll get confidence. Once you get confidence, a lot of the emotional issues with trading will fall by the wayside, and you'll be able to understand exactly how to trade. You'll have the results to prove it, and then once you've got the results, you start to think about how much money you need to make in a month. That's the way to do it. Does anyone have any questions on that so far? Let me see if I can bring this out. I can see some of the comments here. Marzina, Anna, yeah, I love this analysis. What chance do we have against the professionals? Well, it's a pretty much level playing field nowadays. And if you go through how to read the market professionally is one of my training sessions, then we'll know where the professionals, where the big buyers and sellers are in the market, yeah? Okay, so let's take this a step further. So everyone knows now how the process. Let's go through this. So what have we discussed so far? I'm going to share with you also how to take the next step. We've discussed how to define your goals, how to uncover your edge, talked about the trading framework and the correct trading process and how you should go about account size and what account size you need. And again, it's market dependent as well, but I would start small. If you can trade one market and you learn how to read the charts, it's the same candlesticks for every market, yeah? There are a few nuances, and again, every market has its personality. So that's why it's good to become a specialist on a few markets rather than a master of none of them, yeah? And so now you've seen the framework and the process you must have in place to stand a chance of success as a trader. Again, then once you've got this in place, now you can start thinking about making money as a trader. So this is what you need to do. You need to take it a step further and learn how to read the trend using pivot analysis. I'm going to share with you how you can do that. Now, when I mean pivot analysis, I don't mean trader pivots. I mean using pivots in the candlestick charts. So let me share with you what are the benefits of knowing how to read the trend. So you want to primarily trade in the direction of the trend. As the saying goes, the trend is your friend, but most people leave the last part until the bend in the end. Okay? The trend is your friend until the bend in the end. You need to be able to, I always say, when I trade, I try and not trade against the trend. I might not always be in the direction of the trend, but I'm never trading against the trend on the time frame in which I'm entering the trade. So you want to know exactly when a trend begins and exactly when a trend ends. It's objective, it's not subjective. Once you learn how to do this, you'll know exactly. And therefore, you will make sure that you're never fighting the trend. You make sure that you're on the right side of the market. And once you've got that, you can develop a profitable trading strategy with this alone, okay? Or you can enhance an existing trading strategy that you have, and you want to add another element in it to make it better. So here's an invite for you to join my How to Read the Trend training session, and you'll learn how to identify the current trend of the market, how to analyze a trend in multiple time frames, exactly when a trend begins and exactly when a trend ends, and how this knowledge will dramatically affect your bottom line. I'm going to share with you one of my traders in a second, and this completely changed her life. So here's what people are saying about this training. I don't know how to begin to say thank you to Simon for having made such a big change in my life. In short, I've been trading binary options successfully when it was banned last December. So I wanted to learn to trade properly. Contacted Simon after watching his Where is the Dollar Going Next videos. It's on my YouTube channel. I must add that they were so accurate, I just knew that finally I'd found someone who really knew what he was talking about. We chatted on Skype a few times, and I decided to join the trading room for a trial. Due to having a full-time job, I couldn't really join during the week, but the few times I did, it was incredible. I just watched what Simon did, how he used the levels to place his trades. This was something completely new to me after having only traded binary previously. I was amazed at what I saw. Simon contacted me again, and after the trial was over, and after another few Skype calls, I did his pivot analysis training. That's how to read the trend. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it is really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the supply-demand levels, and adapt it to your own trading style. Be very disciplined, don't be greedy, stop when you've made your daily profit, and you will turn losing trades into winning consistently day in, day out. Simon's trading can be adapted to any market. I mainly trade the Nasdaq futures and oil futures. I use my own strategy based on Simon's education. I found the best thing was knowing what you are doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope job. Believe me, it is the best and the only training to succeed with. Simon is probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good, and he goes through it until you understand. I can honestly say that I've gotten more out of this training than I expected. So again, this is what you get in the training. It's over 1.5 hours of training, value $397. It's on demand. You can watch it as many times as you want, and you have personal access to me, and I'm going to share with you how you can do that in real time as well. You can send emails, but you can also come into our trading room, and I'm going to show you how to do that right now. So if you join now, the regular price is $397, and I put the deadline now so you don't feel pressure on you, okay? Friday, August 2nd, so you've got a bit of time to think about it, midnight Eastern time, and you're going to get $200 off. So you're going to get it for $197 instead of $397, but there's more. Here's a link, and I think if you can post it into the chat area so everyone can pick up the link, or you can just write it down. It's basically, and I'll show you how to get it from the website as well. You can just click on it as well. There's a special bonus that I'm throwing in for everyone here on this presentation now. There'll be 1 month free in the live trading room. You can watch us trade, prepare to trade every day. We have a trading session on Sunday where we prepare our zones for the week, where we set up, have a game plan for the week. And then we do that before the market as well every single day, Monday to Thursday. And we trade usually the US market open, so we start 7:30 a.m. Eastern time for those on the East Coast, and we're usually done by 8:30. And we want to get it done and dusted in an hour, mostly, unless there's a lot to do. And we may take trades straight off the open, or if there's something to do. So you can follow along with us, learn how to take the training into practice and put it into practice immediately. So you can go through the training, how to read the trend, and then you'll see us put it into practice every single day. So this is what it is. How to read the trend is $397. 1 month in the live trading room is usually $497. And the total is $894, but everyone here will only pay $197. So what I'm going to do is show you how to get that. And I'm going to pull up my website. So you can go to my website, tradesmartforex.com, and you will see on the side here it says education and training. You can just click on how to read the trend. Okay, how to read the trend is part 1 of how to read the market professionally, where I go into, there's another 4 modules in there. This is module 1 of 5. So you click on there and it brings you to this page. You can see where the deadline is. You click on buy now. You can read a bit more about it. Click on buy now, it will bring you to this checkout. And you can see over here, it says monthly. That means it's there's a monthly payment, but the first month is free and you can cancel it at any time. So you're basically paying $197 and getting a month free. And at the end of the month, you just put a reminder for yourself. If you want to carry on, great. If not, you can cancel it and you won't be billed again. So you have to make sure you cancel it before the next billing. So just put a reminder if you don't want to be billed again in your calendar. And let me show you what it looks like. So again, once you've signed in, you get your username and password sent to you in an email, and you get immediate access. So you can get in through the members area here, or through the link in the email, or you can get in through here as well. Once you click that, it brings you to this page. And how to read the trend is part of Learn How to Trade Professionally. So if you click Access Now, it will bring you to this, and you'll have access to how to read the trend here, or you'll get it through here. This is the first. If you click on that, this is what you get. And how to read the market professionally, session 1, which is how to read the trend. Now to get into the trading room, and let me show you how to do that. You come over here and you click Access Now, it'll bring you to the trading room. Now in the trading room, you'll see, if you go here, it'll tell you what our weekly schedule is, and you register here, and then you click here at the right time, and then you go straight into the trading room at this time, and it's live. If you can't make it live, we have recordings. This is a recording here of the daily session, and the weekly preparation session is where we actually prepare every week. So you have the latest weekly one, which is from Sunday this week, and then you have the previous one. So you can go through and see the zones that we had, and you can go and watch the market trade out during the week and see how those levels work, and they're pretty accurate. So what I'd like to do now, again, I think you've posted the link in, is that correct? The link should be in the, you should see the link. And let me open up for any questions. So if anyone has any questions, then feel free to type them in the chat area now. Let's have a look. Okay, let's have a look. What market are you trade, FX or stocks? I was a stock trader. I don't trade too much stocks anymore. I trade Forex and foreign exchange, spot market, and futures. So we look at gold, oil, E-minis, and look at Bitcoin futures as well. That's what we do primarily, but we can look at any stocks if you want. Remember, originally I was trained as an equity trader, and then I moved over to the Forex market because it suits me better time-wise. Here's a question from George. Does this work on index futures as well? It works on any market that you can chart, and let me show you my charts very quickly. And there's another question he'll answer at the same time. Which time frames and how long are you in a trade on average? Well, it depends. I could be in a trade literally for, depending on how long it takes to get to the target. I was in a trade once that I made, it was a crazy trade. It was a massive movement in the euro yen. I made a tremendous amount of money on that, and the whole trade lasted 2 minutes. So sometimes it can happen like that, and sometimes I can be in a trade for a few days. So I'm primarily day trading and swing trading, so I may be holding trades overnight for a few days. depending, and how long does it take? However long it takes to get to the target or to stop me out. And there's a question there, how do you manage your trades? Some trades I manage set and forget. Other trades, it depends on the market. It depends what the setup is. So, yeah. Let's see if I've got, okay. That's a big question, gang. Gang Lu. That's what are the biggest differences? What are the biggest differences from the stock market? Yeah, how do you see the pros and cons? That's a big question, probably a bit too big of a question to answer now. But the stock market is an exchange traded market, and the Forex spot market is an over-the-counter market. That's one big difference. So it's not going through a central exchange, and a lot of the times the broker may be taking the other side of your trades. That doesn't happen in the equity market as much. Okay, let me pull up my charts and show you. We've got about, I think, a couple of minutes. And I can show you from, let me show you, let's have a look. You can actually see some of this in action now. How supply and demand work. So you can see this is supply, and this is a daily chart. Again, I've got more charts here than you really need because I'm swing trading and day trading. I used to have two setups, and then I just merged them into one. Again, it's probably too much for a beginning trader to look at all these charts, but I'm going really from the monthly, weekly, daily, 4 hour, 1 hour, 15, 5. I used to even go down to the 1. At one point, I would watch the hourly, 15, 5, and 1. So that's what, and you can see the market's kind of going sideways today. We've gone up to supply, down to demand, up and down. This was demand of the day. And you can see we're in supply on the bigger time frames. But if we look here, we're in an uptrend on this monthly chart. So it's likely we're going to make a higher high and probably continue moving up. So it's understanding how the different levels are going to work and the different timing entries. And I'm going to look at the pound. It's been pretty weak. So the pound, you can see again, we had this nice move up on the monthly chart, but this pullback here didn't hold this demand level. This pushed up to new highs and we couldn't hold, so it means we're going down. And if you know how to read that, then you want to be on the short side, and it's a nice big move this week. And you can see, if you understand how to read trend, for example, here's a higher low, and there's a failure here, and we put in a lower high. So here, after this day, you want to be on the sell side here. So you've got a really nice big move from supply that formed here, right the way down to these lines of demand. And you can see where these are coming from. They're coming from, these are levels where we pushed up with 2 demand levels here. So it's putting together supply and demand, trend, and something called price direction. But again, it's a bit beyond what we were discussing today. And let me see if we look if we have any okay, let's pull this back to questions. And again, I have a YouTube channel which you can go to. You can get it from my website as well. Again, if I put you back onto here, you can go to my website. Everything you need is on here. You can click on the YouTube, Facebook, and you can follow me on social media. I haven't been so active on social media because I've been busy trading. I don't know how people manage to do both. It's kind of a lot of work, but I'm primarily focused on trading, got my trading room every day, and also working with traders one-on-one to try and help people become successful traders. I've got a pretty good track record with developing traders to become successful traders. I have some traders now working for hedge funds, or they started their own hedge funds. Some are very, very successful. Not everyone, obviously, but the ones that are willing to put in the work and have that attitude of I'm going to make it happen no matter what, those are the people that go on to generally succeed. So I think I'm pretty much out of time. So thank you very much for having me here. And again, if you have any questions, feel free to, you can email me to simon@tradesmartforex.com. And thank you very much, everyone, for your time. And I think I've got one question here, which is, let me just take one more question. Marzina is asking a very good question. What is your win-loss percentage, please? Again, that's not important. You need to know 2 numbers. You need to know your win-loss percent. You need to know your average win to average loss and your batting average. Knowing that you're right 99% of the time doesn't work if you lose say you make 99% of the time you make $10, and on the 100th time you lose $10,000, you're going to be a losing trader. So you need to know that there's a graph that you can draw with win-loss size ratio and batting average, and if you're above, there's a line down the middle where you're going to be break even. Above there you're going to be profitable, below there you're going to be a negative trader. So again, it depends. I've got people, I can show you the results again another time, would be on, where I've got traders that are batting at 25%, but the average winner to average loser is 7 times, so they're making a tremendous amount of money, but they're only right 1 out of 4 times. So again, very important to know that. I think that's it. We're out of time. Thank you so much, everyone, for joining. Thank you so much for your time. And if you want to know more, go to my website and feel free to send me an email, Simon at, you can see down here, tradesmartforex.com. Thanks so much for having me.